All right, cool. So we got recording going. Okay, we'll go ahead and share my screen. Um, and I want to go to the whiteboard. We'll start out with a whiteboard. Cool. Okay. So I don't. Okay. Here we go. So for an example, if I buy, and let's go over that plan a little bit. Let's try to put some of that together right now. So you need to know your entry price, right? What was your original entry price? I bought let's see for an example. I'm going to use XRP as an example. I bought XRP. I bought XRP at 15 cent. That's your average entry price is important too. So like your original entry price, like I bought XRP at 10 cent, 11 cent, 12 cent, so on and so forth. But my average XRP price is around 30 cent. All right. So my average entry price is 30 cent. Okay. And so I'm now going to set up my sell targets based upon where I've gotten in at. So obviously I want to sell. I'm only going to make money if the price goes above. Is it hard for you guys to see that blue? Let me change this. Let's go with red. So, I'm only going to make money if the price goes above 30 cent. Okay. And with that being said, is that you want to set your targets. So right now, the all-time high for XRP, depending on where you're looking at it. So the first one is 326, which we've already smashed through that one. And on some exchanges, it also went to as high as $3.84. So that's first and foremost, it's always going to be that's the all-time highs. That's always going to be our first sale targets. Okay. So we can do multiple targets. Let's just drop this down. Let's do it like this. We're going to sell at $3.26, $3.84. Next one we'll sell at, let's say, $5. Next one after that we'll sell at $8, and so on and so forth. As long as you know it's above your average entry price. But the problem is that if you continue to buy as the price goes up, your average entry price is not going to be 30 cent. Does that make sense? So I've bought XRP higher than 30 cent. I have. I bought XRP at 50 cent. I've never bought any XRP over 60 cent. So the majority of my XRP, when I average that out, it's no different than how you did in school. You took the accumulation of all the numbers. So, and you divide it by how many numbers you had to get the mean. That's how you come up with your average price. So if you just keep it really, really simple, just remember kind of where you're buying it at. If you're using Coinbase, Kraken, whatever, the exchanges actually will tell you. Like you can go back and look at your record and you can see where you bought these coins at. Coinbase is really good at tracking that for you. It'll show you your average buying price for a cryptocurrency. So you don't have to like do any math on it. Nevertheless, that's going to help you understand just how much money you can make, so on and so forth. You just times, really simply, if I have 10,000 tokens, I'm going to times that by 10K, and that tells me how much money I'll have at that particular time. So, times 10,000, I should have roughly, $30,260 if I have 10,000 tokens once it hits that price, right? Um, so this is helping you come up with your exit strategy and your plan. Everybody's going to look a little bit different because everybody didn't buy at the same time. Everybody might not choose to sell at the same time. Nevertheless, I'm going to send out sell targets when we approach those targets and say, hey, sell some. That doesn't mean you have to go sell all of your coins. Now, if you want to, you can. I can't control that. um, I'm only here to put you in a position to make money. But nevertheless, it's just understanding where did you get in at. All right. And then from 30 cent, for an example, from 30 cent to $3, that's 10 times because if I added a zero onto 30 cent, that gives me $3. Right. So 10 times my money is what I got. So how much did it actually cost me to get this is $3,000. I would have invested $3,000 around at an average entry price of 30 cents, times that by 10. That puts the price of XRP around $3, and that puts my profits, that puts my total amount of how much my XRP is worth at 30,000 and some change. Okay, so you want to kind of have these things in mind. Um, but like I said, uh, I will be sending out the sale targets for you guys ahead of time. The Let's go over something else real quick too. Let me get rid of all this. I want to go over something else real quick and make sure we have understanding of this. I sent out a trade and it says, it's going to be a screenshot, but let's say it says sell USD JPY, and then you have a stop loss, 100, and then you have a TP. Our TP it's a sell, so it needs to be lower. Let's see, 109, 800. Okay. So all you have was those are pip calculations. All in between 110, 100 and 109, 800, the price can move up and down. That's your ceiling and your floor. It doesn't matter if we're buying or selling. You always got a ceiling and a floor. We trap price in. If you got in, your entry is, let's say you got in at 110. Okay. If the price were to go, and let me make that a little bit wider. Hold on. There we go. Okay. So let's say you got in at 110. That's your first entry. Entry number one. Okay. Then you got entry number two. Entry number two should be, if it's a sale, you want entry number two to be what? Higher than the first entry. So 110, 100. And then let's say you did a third entry. You want this one to also be what? Higher than the second one. Okay. So 110, let's say 300. All right. Now, if they come down to hit our take profit of 109, 800, I'm going to do a little help you understand how to count pips here. Okay. To the right of the decimal point is what you really need to focus on. So from 110, 300 to 109, 800, that's going to give you, so 8 plus 2. So we come here, 109, 800. We have to only look at the right of the decimal point. 8 plus 2 gives you 10. That's how we get to 110. So that's 20 pips. Now that we're at 110, you need 30 pips to get to 110, 300. Okay. So in total, that's 50 pips. 50 pips should give you about $5. All right. You see, are we understand how I got this? And yes, you will be confused because I remember the first time I was learning this, I was like, well, what's going on? Okay. Here we go. Next one. Entry number two. What's the difference between 110, 100 and 109, 800? If we subtract the 10, that gets us down. If we subtract the 100, that puts us down at 110. So that's 10 pips. Then from there, there's 20 more pips to get to 109, 800. So that's 30, which means 30 pips, you would make what? $3. Your original entry point, and when it hits TP, you're going to make from 110 to 109, 800, $2. In total, how much did you make in profit? You made 5 plus 3 plus 2 is what? $10, right? Hold on. There we go. You made $10. You did that on one trade. You did that on one trade. Now I'm going to show you how to do it on MetaTrader as well. It's just that the market's closed right now. So if I try to go show you, it's not like it's going to let me put the trade in. But you did that on one trade, and we're gonna do some live trading for these purposes. I want to do some live trading. My schedule's a little conflicted. I got a baby now, right? So it's things aren't what they used to be. But with that being said, is you can maximize a trade, and if you do that, not only will you make a lot more money on each trade, but more importantly, if you're missing trades, like DL was saying earlier, he's like, I'm working, whatever the case is, I might miss some trades. Well, if you start to maximize the trades that you do get, it's gonna help you get the same effect as if you took more trades because you can take more entries. Every entry is a trade in itself. All entries are separate from themselves. Like even though this is one trade idea, it's one trade, right? This is the trade. The trade is sell USD JPY. There's your stop loss. There's your TP. That's one trade alert. But you have three different entries, so that's still three different trades. This is how you maximize your trading. It would be the same thing if it's a buy, just inverse of itself. So let's look at if it's a buy. All right, let's come do a buy. And so we're going to buy, hold on, here we go. USD JPY. Stop loss is going to be we'll just inverse those. So the stop loss is the TP here, so 109, 800, and our TP is going to be 110, 500. Your first entry, see here, entry, hold on. Entry number one is going to be same. It can be the same thing. We can enter at 110. That's fine. Okay. Enter at 110. And our next entry can be, so hold on, there we go, entry 2. That could be 109. 109. Let's just do 109. 900. That's fine. 109, 900. Entry 3 is 109. 50. Okay. Because our stop loss is 109, 800. So entry 3 is 109, 850. Let's do the calculations on it and see how we make our money. Okay. Now, same thing right here, just a buy, right? So we're going to do equals. Why is it not doing it? Okay, there we go. We're going to do equals from 110. If you hit the TP of 110, 500, how much is that? $5. And you're learning pip calculations right now. Somebody want to try to take the next one for entry 2? If we go from 109, 900 and our TP is 110, 500, how much money would that be?
I don't know. Is that $4?
Okay, so we got from 9 to 10, right?
Mm-hmm.
Is that's 10 pips, that's $1. Okay.
Mm-hmm.
And then we add what's 50, what's 500, take away the 0, that's 50 pips. So what do we know that to be? $5, right?
Right.
So that's what? $5 is 6.
Oh, okay.
Remember, each entry should get you more money. So it can't be that you
Mm,
made $5 on entry 1 and you only made 4 on entry 2. Does that make sense?
gotcha.
So that's $6. Entry 3 is so this one's a little bit different because if you see here, we're not using just off a flat number, but that's just going to be 5 pips. Okay. So you need 5 pips to get from 850 to 900. So that's 5 pips. Now that we're at 900, you need another 10 pips to get to 110. So that's 15 pips. And then you got 50 pips to get to 110 500. Okay, so $1.50 plus $5 is what? $6.50.
650. Mm-hmm.
Mm-hmm. Okay, so hold on. Why is it doing that? Come back, come back, come back. What are you doing? No, no, no. Oh, I see what's going on. I'm like, what's going on? Okay, there we go. Okay, so what are we making profit? We made a total of
1750.
6 and 5 is 11. 11 plus 6 is 17, and then we add our 50 cent, 17.50. So if you see here, I took the same trade. All I did was flip around the stop loss and the TPs because that's how it will work. You have to understand when you're trading is every time you make a sale, somebody has bought where you sold. Every time you make a buy, somebody has sold where you're buying. That's the same thing with investing. Better investments, being a better investor is understanding trading so that you can be better at investing. That's why I started Better Investments. Is because I realized I was like, oh wow, trading and investing is the same thing. It's a market. It's buyers and sellers, supply and demand. It's the same thing. The difference between trading and investing is that investing requires fundamental analysis. Trading does not require fundamental analysis because you'll hear like, oh, well, the news, like, and it happens, like the news will come out and shake the market. And let's say the US has like some terrible news. It could send the US dollar flying down. So if you put in a sale for USDJPY, what are you doing? It's the US dollar versus the Japanese yen. In all reality, you're really trading economies. The currencies are in representation of the economies. So if the US dollar, if the United States has bad economic news, it could send the US dollar railing down, which could send stuff like Bitcoin, gold, silver, so on and so forth going up. Why? Because what do we measure Bitcoin in? How do you know how rich you are if you got Bitcoin? You don't go on there and say, I got this many Bitcoin. Most people don't do that, even though that's how you should. That's the difference between, I say this all the time because he put it in a very it's not like he made this up, but he took a terminology, an investing terminology, and he put it on a song, and the way he put it bar for bar is exactly how you need to think about it. You know the price of everything, but the value of nothing. Jay-Z said that, and it makes perfect sense if you understand exactly what I'm explaining to you now. Price means nothing. It's about value. You need to measure your wealth. How many XRP do I have? That's your wealth. How much your XRP is worth in dollars is the price. Two separate things. Okay. So if the economy is if the US dollar devalues and goes down and we get some bad economic news, what do we measure Bitcoin in? You don't go, I got this many Satoshis. No. Uh and for people that don't know, Satoshis is the incremental amounts of Bitcoin. So a million Satoshis equals one Bitcoin. So you don't say that. You don't say like, well, I got this many XRP. I mean, you may, but reality is what you're really looking at is if I got 1,000 XRP, how much is XRP worth? How much is it worth? Well, the value of XRP is not contingent on the dollar. The value of XRP, as you see it, is going up and down, but the reality is it's still what it is. Like take a piece of gold for an example. You can buy a piece of gold and come home, put it in your closet, and don't ever do anything with it. Just put it in your safe. Yet the price of gold in 2024 went up $700 an ounce. You didn't have to do anything with it. You didn't have to flip it. Nothing. It went up $700 an ounce. Notice what I said. It went up what? $700 an ounce. That piece of gold ain't changed. It's the same piece of gold. You never even took it out to save. Same piece of gold. Asset prices increase due to inflation, which is the devaluation of currencies. The US dollar goes down in value every single day. Therefore, it inflates the value of assets that you buy with your dollar. Okay. If your dollar is worth less, like think about it like this, trade and barter. What would you sell somebody a cow for one chicken? Absolutely not. You might give them a cow for 5 chickens. And at any point in time, if chickens became less valuable, you would say, well, I'll give you the cow for some chicken, but I need 10 chickens for this cow. This is how the world worked prior to us having money, and which is gold and silver. And then prior to after that, we got currencies, which currencies were supposed to just be a quote unquote better version of gold and silver. Instead of you walking around with a bunch of gold and silver and somebody robs you, you leave your gold and silver at the bank, you get a certificate note, which is how the dollar first started. That's how we first got currencies. You get a note that says you got $20 and that $20 is worth so much in gold. Fast forward to today's time, we don't have that at all. You just have dollars, fake little pieces of paper that have no value at all. And because of that, over time, the what you need more and more and more of those fake pieces of dollars, fake pieces of paper to buy the things you want to buy. Bitcoin is not going up in price. Bitcoin costs you more dollars. Your food is not going up. They're not charging you more money, right? What's happening is your dollar can't buy you the same amount of goods and services. Therefore, the price that you're looking at has went up. Now, the value can also be increasing as well. Like for an example, with gold or silver or whatever, silver is something that it decreases in size supply every single year. Silver is in our phones, it's in our tablets, it's in our computers, it's in bombs. Silver is in everything that you can pretty much think of that you need on a day-to-day basis. So with that being said, there's less and less silver, and so it becomes more and more valuable. So yes, the value can go up, which can drive the price to go up even faster. That's when you really see something take off like a rocket. So for an example, Bitcoin. There's less and less Bitcoin every day, yet at the same time that there's less and less Bitcoin, the dollar devaluing is causing the price of Bitcoin to go up. But because there's less and less and less of it, it can skyrocket. So I remember when Bitcoin was at $3,000 and people were saying, oh, it can go to 10,000, and look at it now. It's sitting at $105,000. The reason why it's skyrocketing like that is because not only is there less and less Bitcoin, but the dollar is becoming less and less valuable. Do we got any questions around this right here? What you're seeing on your screen as far as how you can maximize the trades?
No, not at the moment.
All right.
Good.
So yeah, so it's going to make more sense if we see it on MetaTrader. It's going to be a lot better for you. But make sure you're maximizing your trades. That's going to help you out. You don't have to do it every single time. I'm just letting you know, like, don't play favorites. Okay. So don't do it on one trade and you don't do it on other, because then you're gonna have inconsistent results. If you're not going to maximize it the way I'm telling you, then just take a trade, put in one entry, and leave it alone. Don't change your lot size either. So what people will do is they'll go put in. So when you first put in a trade, it's going to say 0.01. You'll put in a trade and it'll be 0.01. That's your lot size, right? Don't change your lot size. There's no need for you to do that. Why would you go put down a 0.3? Why would you do that when you can do 0.01 one time, two times, three times in three different places, and that gives you the same effect of having 0.3 in as far as a lot size. Guys, this call is going to Zoom is going to kick us off here in a minute. I'll crank up on I'll send another link. We only got 12 more minutes left. Let's see here. Yeah, I'll send out another link if you guys want to hop back on, and we can pick back up kind of where we left off. But I try to go an hour. Yeah, we got 12 more minutes left for, well, coming up on 10 minutes now. But it's only one other thing I was going to cover, and that is it for the night. So we're going to stop. We're going to stop at 9 Eastern. But I'll go ahead and end this now, and then I'll send out a Google Meet call so that we